Good morning, good afternoon, and good evening, everyone, and welcome to another FP&A Trends webinar. Today, we are going to talk about the latest trends and developments in financial planning and analysis, and we are going to share with you Global Survey 2021 survey results. My name is Larissa Malmichuk. I'm Managing Director of FP&A Trends Group and International FP&A Board. The main purpose of our webinar is to share with you what is happening in the world, what are the innovations, what are the moves, how technology can help us, everything about best-in-class FP&A. Let me quickly remind you about the agenda. So very quick overview of the survey results. Then how we can increase value creation through high-performing FP&A. It would be a presentation from the practitioner, and then trends and developments in FP&A and how technology can help us. It would be presentation from technology thought leader. Of course, conclusions and recommendations, and we will have our Q&A session as well. Let's move on, and I'm so happy to introduce to you our panel of experts. Guillaume and Pras, please can you switch on your cameras, your microphones, and we have these very quick introductions. Let's start from Guillaume. Guillaume Rachlin, Vice President Finance at Walmart Canada, originally from France, now residing in Toronto, Canada. Guillaume is currently responsible for e-commerce and merchandising finance, but previously he was managing corporate finance, investment, real estate finance, as well as transformation programs for his organization. Prior to joining Walmart, he held various roles in finance and strategy at different organizations, but also at strategy consulting as well. And a special professional interest of Guillaume's is in how FP&A can manage the value, how we can create and manage the value of FP&A for decision-making process. Guillaume, we are welcome to the webinar. We are so happy to have you here.
Thank you, Larissa. Thanks for having me. I'm very happy to be with you as well.
Thank you, Guillaume. Our next expert, and many of you know Pras because Pras presented at quite a few FP&A webinars, as well at face-to-face meetings in North America as well. Pras Chatterjee, who is Senior Director at SAP. At the moment, Pras is responsible for planning and analysis products at SAP, focusing on SAP Cloud and SAP BPC. But previously, his experience, he was a practice manager for SAP Business Analytics Services in the whole North America. And he served as solution architect for SAP, focusing on planning and consolidation around the globe. Pras is a chartered professional accountant, and he worked in various software companies as a finance practitioner before joining SAP. And again, Pras is joining us from Toronto, Canada at the moment. Pras, you're welcome.
Thank you, Larissa. Thank you, Guillaume. Pleased to be here and looking forward to this webinar.
Thank you so much. Thank you for being part of this. And of course, you are in Toronto, Canada. I'm based just outside of London. So glad to have this international perspective as well. I will have a few general slides, so you can switch on your cameras for a moment. And I would like just an introduction of my background very quickly. As I already mentioned, FP&A Trends Group, I'm CEO of FP&A Trends Group. And I traveled the world with FP&A Trends project, with International FP&A Board project until COVID situation. So 27 cities, 16 countries, 4 continents. This is where we had held our face-to-face meetings. And at the moment, we are traveling digitally. The latest news from us that we started the best practice workshop and FP&A consultancy as well, just recently. About this webinar, it's 1 hour webinar. There will be 2 polling questions, and please vote, please participate. We would like to see your perspective. There will be an interactive Q&A session at the end, but please use your chat box. It's very easy to use as soon as you have questions, and we will try to answer all the questions subject to time, but if not online, we will do this offline. A presentation is available in handouts, and also the recording of this webinar you will receive 2 days after this meeting. And after the webinar, there will be survey. Please stay and help us to understand how we can improve it. Before we start, thank you so much to our partner, SAP, one of the world's leading provider of modern FP&A solutions. So thank you so much for being part of this project. I prepared just a few introductory slides to set up the scene for this meeting today. And I would like to remind you that we already discussed the latest trends and developments in FP&A just at the beginning of the year. It was Digital North American FP&A Board in January 2021. 5 experts, again from different international global companies, they identified those 10 trends, such as extended planning and analysis, analytics that includes AI, ML, robotic process automation, integrated FP&A process, scenario management, predictive analytics, FP&A business partnering and storytelling, a bridging strategy execution gap, driver-based performance management, and of course, changing role of FP&A professional to multi-skilled. So those are the trends. And what I want to say that survey that we just finalized recently, actually just 1 week ago, it just proves all of those trends, but has some additional perspective. So about the survey, this year we had 342 respondents, 1,246 for the last 4 years altogether. It's quite a good distribution of different geographies, as you can see from here. And the survey would be available for your review after this meeting as well. So a lot of interesting insights. Some of the highlights of the survey, some good news. 67% of decisions, they used factual evidence most, if not all of the time. And actually it's up from last year, 56% last year. But what I would like to say that we've been doing this survey for the last 4 years. And this is the historic, it's the biggest one in the history of this survey. AI/ML is having a dramatic impact on forecast accuracy. Just to give you the comparison, that those average companies that are not using it, 50% of them say that their forecasting process is good or great. And this compares to those that actually started to use AI/ML, and it's increased 33% to 83%. 12.5% of organizations are able to spend more than 40% of their time on high-value adding activities, which is great, but it's only 12.5% of those organizations. And scenario analysis, obviously, year 2021, it's used all the time in more than 50% of cases, and it's up 19% from the last year. I really like this definition of FP&A, and those of you who participated at our face-to-face meetings and also attended some of our webinars, remember this definition. And this definition of FP&A is coming from Gerhard Lohmann, who is former CFO at Swiss Re. So he described FP&A as the framework that increase and manage the value of the company. And we increase and manage the value of the company through these 5 dimensions. So FP&As, they help they help to share what is the business value. So understanding is important. FP&As, they are describing this value through matrices and models. FP&As steer decision-making process and support this decision-making process. And FP&A extract this information and share its storytelling situation. And of course, FP&As also help to share the value of the company, reporting to the market, to external organizations. So it's all about value creation. And today, we will look at the trends from the point of view of value-adding FP&A. But there are some not very good news, unfortunately. So we see a lot of consistency on what we observed for the last 4 years. Amazingly, this is the time, how time is distributed between FP&As and how it's distributed between high, medium, and low value adding activities. And unfortunately, for the last 4 years, time which is spent on high value activities, it's only from 20 to 23, this year 22%. Unfortunately, it's not changing. Why it's not changing? We can see the biggest issues that people are meeting at the moment. So again, it's very consistent result for the last 3 years. You can see that a lot of data-related problems. Actually, data-related problems, they are 59% this year. 59% of companies, they say that they're having problem with the quality management of their data. There are some problems with the processes. For example, people say that there are too many inconsistencies in definitions and processes. It's 20%, 21 this year. And unfortunately, it's not improving. And another problem, it's about technology and people. Everyone works individually on offline Excel, so no one can see the big picture. 20% of the answers were around this. And again, no improvement. It's even getting worse. Just some of the insights from this survey. We consolidated information on how insights could be generated and how we can drive actions. And in the average case, 35% of companies say that they're spending 35% on those, whether they are high value or mid-level generation, but this is how they spend their time. We can see that amazingly, artificial intelligence, machine learning can increase this time by 16% because the time is there. People are not spending time on data validation. Driver-based is increasing this process by 4%, and cloud technology by 6%. But this one is quite interesting. So forecast accuracy, depending on the technology that is used. We can see that comparing to the average company that is not using modern technology, using artificial intelligence, machine learning, improve this quality by 30%. Using only driver-based planning model, maybe even in Excel, it's already improves this by 9%. And using cloud, modern cloud technology, flexible one, it improves by 20%. So those are the insights. But let us look at some other insights as well. And let us look at the example of one particular company and practitioner view. So Guillaume is here, Vice President Finance, Walmart Canada. And his presentation is around how to increase value creation through high performance FP&A. Guillaume, you're welcome, and the floor is yours.
Thank you, Larissa. I would like, for me to talk about value creation through high performance FP&A. There is something that is absolutely critical through value creation that I would like to show you on the next page, which is basically if I build upon some of the key results that we're seeing from the survey, which I found very interesting. Some of the biggest concerns that came out were the one that I've highlighted here on the left, which were difficult to justify ROI on FP&A, and challenges that FP&A is sometimes not considered as a strategic investment. I think that should bring us to reflect in terms of, okay, it's all challenges that we faced in our life or we faced in the past. How could we overcome those challenges? The journey I would like to share with you is somewhat how value creation is an essential and a core part to any transformation that we should be considering in FP&A, just because that somewhat solves some of the challenges and concerns that have been highlighted here. Through increased value creation and being obsessed by it, so to speak, that will allow us to then justify ROI on the function and also be considered as a strategic investment within the company. So I would just like to share a bit of the journey and some thought that we had on the topic. On the next page, I think it's interesting to look at, what do we mean by value creation? There's a lot of definition that we can find that are a bit more academic. Here, a few things that I thought would be good sharing with the group. The first one is business partnering, right? The traditional way to look at it is everything that is linked to performance management, balanced scorecard, accurate reporting, the traditional FP&A tools such as variance analysis, rolling forecast, budgeting, zero-based budgeting, And I think one of the key transition that has to happen within that business partnering is moving from those traditional things that still needs to be done very effectively to something that is more, how can we help to find new business potential? How can we seek for new insight within the data, within the business challenges that we're seeing? And how can we challenge status quo so that we can help accelerate business decisions? If I look at the corporate FP&A, the traditional scope of it is consolidation, reporting, external communication as well when we communicate earnings to the street. And I think more and more, when we are fostering value creation within that group, there's a transition toward better internal storytellers, being able to certify information and assess, what's the one source of the truth, what is right from wrong, and how can we tell the story both internally and externally, certifying some of the information that are coming with it. It's very trendy right now on all the internet, to try to assess what's accurate, not accurate from an information standpoint. And we think that corporate FP&A has a key role to play on that field. The third one I would like to highlight relates to investment. The traditional way to look at investment, which I think will still be relevant, are linked to NPV, IRR, payback period, building the models, having sensitivity analysis. One of the things that we believe is critical when we talk about value creation is, how about delta case? Are we spending enough time on assessing what will be the value for the company if we do not invest? And then what would that be if we do invest? How can we model new business opportunities and new operating models that are somewhat revisiting some of the key metrics that we were considering very traditional in the past? New technology investment, for example, would have most likely very different profitability profile than one that is a bit more traditional. So those are really things that we believe are critical in order to put value creation at the center of the transformation. On the next page, there's a couple of things that are important for me to highlight. I think in the end, it comes down to what our strongest belief. And as we're seeing technology accelerate, there is almost a dilemma between what will stay within human realm and what will become more driven by a computer, whether it's machine learning or predictive. There's a couple of beliefs that I have and that we have toward high performance FP&A. The first one is analytics. Analytics, is not something that sits aside from FP&A, but somewhat should be part of finance core business. That is an important statement because that means that the product itself of analytics should require a lot of understanding and deep dive from the team as well. And that becomes a field of expertise within finance and not something that is just enabling finance to operate. The second one is on communication and storytelling. Not to say that finance people are, bad communicator, but let's say that it's usually or traditionally not their core strengths. However, we believe that when we think about the next few years, it must become a strong competitive advantage or a strong strength, because that will be a key differentiator in terms of sharing the right story of the company, both internally and externally. The third one is on decision support and value creation, as I mentioned. I've put it here a bit provocative, needs to be an obsession. Sometimes people ask, what keeps us awake at night? I think this one should keep us awake at night. Are we delivering enough value for the company as a FP&A team? And can we deliver even more? And the fourth one relates to enablers, which are people, technology, ways of working as well. There are enablers. They can make a difference, but we believe that they will make a difference. We're going to talk a bit today about the technology, ways of working, but people should not be understated as well. And it's basically the mix of all those factors that will allow us to be successful. If we flip to the next, and I want to walk you just on the journey that we've been through and the one that I've experienced. I think that if there's one simple way to represent the journey we're trying to be on is, how can we move from, let's say, the simple Pareto principle of 80% and 20%, 80% on data consolidation. We've highlighted in the survey that a lot of it was still manual consolidation within Excel, different Excel file. We're all seeing the same. And I can already tell you, even at Walmart, #1 retailer and private company in the world, there's a lot of Excels. So how can we move from 80% of consolidation, coordination, managing numbers, 20% of influencing, hunting for value, toward a very different balance? And the balance that we are considering is actually an interesting one, which is splitting responsibilities into two buckets to oversimplify. One on data, with the goal to spend a lot of time on data governance, reporting, dashboards, data improvements, predictive analytics that needs to rely on strong data set, and also machine learning. So one team, so to speak, dedicated to that part, and another one that is more dedicated to business partnering with a reverse Pareto principle that 20% is still based on the traditional processes that we all know, such as planning, ad hoc analysis, understanding of the business performance, but 80% being having a seat at the table, being able to influence, support decisions, and hunt for value. And that is, we believe that it is absolutely critical to try to aim for that sort of balance, but the fact to have a dedicated data team is a strong enabler to allow business partners to focus on really what matters the most. The title here is No Random, because if there's a simple way to look at it is to say, how can we move from managing numbers to basically steering and supporting the business, and that has a consequence on numbers. My experience is, we can talk a lot about numbers, but talking only about numbers put us in a place that is usually a good indication that we're not striving for enough value and not discussing enough with the business. On the next page, there's a couple of things that I would like to highlight. So the approach that I've seen in my career and that we are on a journey right now is a couple of steps that could be taken. First one is a bit obvious, but a good way to start. Just assess the size of the price. What are we talking about if we want to do that transformation? Simple rationale that we had is try to aim for delivering at least 10 times the cost of the team in incremental value for the company. If we are a bit more technical, we would like to do NPV analysis to understand how we will create that value. I would say whatever. I think the rationale is how can we 10x generate value through transform FP&A? That is a good call for change. The second one is to deploy dedicated analytics capabilities. Roughly the change that I mentioned on data team and business partnering, say 10 to 20% of the current team, for those that are not strong on the data side, dedicated to data and reporting, and that will be very good at it. The third one that I'm very passionate about is to reset expectation, because usually there's the change that we're making in organization and transformation in processes requires us to spend a lot of time with the leadership and with every associate and people in the team into redefining what success looks like for FP&A. It's still the traditional stuff, but not only. There's also that value creation and how can we assess it through the right objective and key results that are being measured on a regular basis and discussed. The fourth one is to invest on people and tech. A simple rule that we had is take again that team cost, because we all have different sizes of team and company, and basically 10 to 20% to dedicate in CapEx on the technology side for transformation, and reassess the headcount mix that we have in the team, ensuring that we've got the right people dedicated to analytics and the others that are more keen on being closer to the business and being able to influence the decision. And the last point is execute and improve. It's a journey. So, I mean, by no means we have it right. It's always a matter of continuous improvement, which then requires some strong leadership and also some strong leadership development capabilities that we need to work on. So having the right people, working with them into, working, doing our best, trying to achieve those goals, but most importantly, improve and being in a growth mindset on a day-to-day basis, which is absolutely critical. So those were really the key things I wanted to share, and I'm happy to get some comments on that, Larissa.
Guillaume, thank you so much for sharing your insights with us. I would like to ask Pras to join us as well. Just a quick conclusions from your presentation. I consolidated here your top 4 trends that you just shared with us. And of course, there's so much in line with our definition of value-adding FP&A. Pras, what would be your key takeaways from this presentation? Any additional thoughts?
Yeah, absolutely. I mean, if I look at the key value-added FP&A metrics that Guillaume talked about, clearly for me, I'm very passionate about analytics. I think, for finance to make that next step to be a business partner, it's really about going beyond Excel and sharing data and analyzing data beyond grids, but through aesthetically pleasing manner, and then continue that with better communication and storytelling. It's not about reflecting on what happened yesterday, but talking about what's about to happen tomorrow. And as Guillaume mentioned, that a lot of that is going to be accomplished through better education, better training, and really adopting technology to help facilitate this. So moving ahead with this, not staying in the past. So I think that's clearly a very strong area for FP&A to go towards.
Absolutely. Thank you so much, Pras. Guillaume, from my side, I really like this balanced approach. We all know that only implementation of technology without good process, without educating people, without understanding what should be the value and what is the definition value, it's practically impossible. And you gave such a good overview of this. People already started to send their questions, and they're asking about the survey results. They're asking whether COVID situation changed the survey from the last year, and my answer is yes. We can see a lot of accent on value creation and what are the ways to do the value creation. And as we've seen before, even a simple introduction of driver-based model at first in Excel, then in system, then developing this through the process, it can make a huge difference. So Guillaume, I don't know how your company was moving through these difficult times with this value creation.
Yeah, it's a great question, not an easy one to answer, but what I would say is, I think for us the journey is we've embraced a lot of the tools enhancement that we've seen in the past, whether it's zero-based budgeting, some driver-based approach as well. And I think we have tended to focus a bit more on how to execute those tools right versus let's use them at their best to have the right discussion with the business. And I think it's a trap we fall a bit into, and the COVID has basically accelerated the need to talk about, okay, what is driving value for the future? How are we able to unlock e-commerce and store? So really it's new ways of thinking and finding ways to use the tool that we have to enable it rather than reverse.
Excellent answer. Once again, thank you so much for excellent presentation. And now this is the timing to check how our participants are voting. What is the biggest trend for them? So I'm launching the first polling question. And please, can you start voting as soon as you can see results? And these polling questions, it's around those trends that were identified by Guillaume. So what is the most important trend for you right now? Is it analytical transformation? Is it business partnering and storytelling? Is it FP&A process improvement, or is it integration of your planning processes? Please, can you continue to vote? Once again, what is the most important trend? only one. I know that all of them important, but to you, for your experience, what is the most important trend in FP&A right now? Is it analytical transformation? Is it business partnering and storytelling? Is it FP&A process improvement or integration of your planning processes? I can see that more than 60% of you voted, more than 65. I'm closing the poll. It's 70% now. Fantastic, sharing the results. And I would like to ask both Pras and Guillaume to comment on the results as soon as you see them. Guillaume, you are the first. You can see that 42% is relating to business partnering and storytelling, 29% to analytical transformation, and process improvement and integration of planning processes, it's 14 and 15 respectively. So what would be your commentary?
Yeah, thanks. I would really concur with what was being said. It's very interesting to have those results. It seems that predominantly the business partnering, storytelling side is important, and the transformation, the analytical transformation as well, which really resonates with how I'm seeing the key priorities as well. And I think the really COVID in the last few months or year even has accelerated that need for journey. So very interesting, and I'm fully resonates with me.
Sorry, I was on mute. Pras, I would like to invite you to comment on this, please.
Yeah, absolutely. I mean, I think it makes complete sense. I mean, I'd be surprised if business partnering wasn't top of mind, because, you know, right now, I mean, we've always known that finance and FP&A, especially, most of us in this field are looking for a seat at the table, and especially in today's dynamic environment and you know, volatile environment, it's more and more important for finance, you know, through business partnering, getting an understanding of what's happening across the organization to, you know, be able to get that seat at the table and be a true business partner, but also be able to, you know, tell a story and weave the narrative about what's happened in the past and what's about to happen. It's not about stating the obvious, but rather stating what's not obvious. And it's great that people and our community is well aware of this.
Thank you so much for your commentaries. And thank you so much to all of you who voted. Let us move on. And now let us look at how technology can support value creation in FP&A. What are the latest trends from technology point of view, and what survey is telling us about the situation and what are the trends? Pras Chatterjee, Senior Director at SAP. You're welcome, Pras.
Thank you so much, Larissa. So thanks, everyone. So, you know, we've obviously heard a lot of, you know, things from Larissa and Guillaume about, you know, where FP&A is, where FP&A wants to be. So I'm going to talk now about how technology can help support all of this value creation that we're looking forward to. So as we move on, I want to highlight and also point out some of the highlights, as well as some of the lowlights for me in the FP&A survey. Some of the key things I want to highlight are that 51%, which is amazing, are using scenario analysis, which is up 19% from where we were last year. And this really means that we're capturing the moment, talking about opportunities that are present to us versus the scheduled way of planning that we were doing before. 45% of senior executives have a real-time view of the business, which is a big improvement, but it also highlights the fact that 55% of senior executives don't have a real-time view of the business and what's happening in the moment. Again, 4% of organizations can produce a forecast in less than 1 day. While this is an improvement over the last 2 years, it still means that 96% of us cannot provide a forecast, and we're basically telling our business partners, we'll get back to you. Now, some of the lowlights, obviously 40% report their data as poor quality. 26% of us have received no technology investments in 5 years, which means that in the last 5 years, with the prevalence of predictive planning and predictive analysis, machine learning, cloud-based technology, real-time planning, 26% of organizations, and organizations that we all have invested in and that we all need, you know, many of us are shareholders in, are still working in the dark ages. And the last one is only 7% of us are happy with the current situation. So there's a long way to go for this. So let's move on. So how can technology support these successful trends and really help mitigate and you know, advance some of the things that I pointed out before? For me, the key 4 things are integrated ERP and planning, having a complete integrated finance platform and solution that FP&A can work off. It's about having a cohesive data management strategy where we know where our data is coming from. We're not worried about our data. Our data supports our overall strategy. It's about scenario planning, moving away from the scheduled way of planning in the past. And it's also about extended planning and analysis, the whole concept of FP&A, being a business partner by being able to bring in information from across the enterprise all together in one. So let's move on with that. So I did want to point out this stat again. I keep going back to the 4%. So in the past again, what we see right now is in terms of the average, 4% of us can provide a forecast in less than 1 day. But if you look at the medium across from that, there are still many organizations that are still doing it in 1 to 2 days, 3 to 4 days. The average being anywhere from 3 to 10 days. But what's scary is many of us are still working 20 to 30 days, which means that we don't have a clear view of our information and how to really generate a better forecast. And Guillaume talked about the fact that, hey, we need to be a better business partner. Well, the way to be a better business partner is to go towards less than 1 day, or even at the worst case 1 to 2 days, because you do not want to be that finance organization or that FP&A department where when people ask for guidance, you say, I'll get back to you, and that get back to you is anywhere from 1 to 30 days. So let's move forward. So how do we build a better forecast? Well, the key thing here is having an integrated ERP and planning system. Modern ERP technology really allows organizations to save time and reduce errors with a single version of the truth, which means that the previous way of doing planning, where we had an ERP system and we would take data from the ERP, load it into our planning tool, whether that happens once a month after 5 days after close, once a week, maybe twice a month, maybe once at the end of the day. That is an obsolete and archaic way of planning. Real-time modern planning and ERP solutions that are fully integrated, that come bundled together, allow finance to provide real-time planning to actual variance analysis, which means that as transactions are hitting your ERP, you as a finance department are able to deliver a better forecast because you can effectively go into your planning solution, see what the results of that transactions are on a second-by-second basis and compare them to your budgets, your plans, generate new forecasts, and through this, give better business insights. So that's step one, having an integrated ERP and planning solution that is fully connected in a real-time manner. If we move on, I want to talk about where we are with FP&A activity and time distribution. So some in 2020 and 2019, as you can see, finance spent a lot of time on data validation, whether it was 33 or 32%. It's great that in 2021 we've moved down to 21%, but that also has been offset by the fact that we're spending a lot of time on data collection, which means that there's a lot of data, and we know data is exploding on a day-to-day, month-to-month, second-by-second basis. So we're likely spending a lot of time collecting this data, but it's good that we're spending more time driving actions, which has gone up from 5% to 16%. So let's continue to drive actions, and how do we do this? If we move on, one of the things that we can see is having a key and strong data warehouse and data management strategy. I understand that data warehousing is a concept that none of us want to talk about. We've moved on from it, but data warehousing has gotten a lot more agile, flexible, and seamless and user-driven by you in finance. Modern data warehouse technology exists in the cloud. And what that means, to make it very simple, is that all of your financial and operational data can sit in one place in the cloud, easily accessible for you. So easily accessible for you, meaning that you can take that information and combine it and have one source of data for all of your information highlights and generating insights, which means that you're never saying, but when you're presenting at the board meetings or profit day meetings or presenting to senior level executives or being a better business partner, you're able to effectively generate insights on the fly with trust in your information. You're bringing this operational financial data together and delivering critical and time-sensitive information. And why this is important is that let's imagine a world where we're as FP&A, we're working with our FP&A information, our financial statements, but we know there's a lot more that affects this operational data. So if we're about to give insights on, let's say, our overall FP&A, giving guidance on sales, but we want to give guidance on how sales can be supported. Maybe we look at HR data in terms of employees that can help support our sales targets or whatnot. But we have all that information in one source in a click, in a drag and drop manner where we're bringing it all together. So that's a key thing here, having a consistent data strategy. And again, as 40% of you have talked about, your data strategy is poor, but this can be overcome with having a strong data warehouse and data management strategy that is easily accessible and possible today. Let's move on. The third thing I want to talk about is scenario planning. And this is an extremely important concept because in the past, one of my pet peeves was the whole concept of schedule planning, where FP&A, we knew what our jobs were. We knew that we couldn't take the summers off because in the summers our annual planning started. We spent August till maybe September, October, November working on an annual plan over and over and over again. And then maybe we finished the annual plan by December, and then we spent the rest of the year, maybe a couple of times a year the following year, doing updates to that. Maybe we did forecasts once a month at the end of the month so we can give guidance towards what might happen. But that is obsolete. Maybe that still needs to be done. But what the pandemic showed was the best-in-class organizations effectively had their organization come to them and say, hey, there's a disruption in supply chain. There's an opportunity in sales or disruption in sales. There's an increase in cost of commodities. What is the impact of one of these, all of these, or some of these together? I think McKinsey pointed out just after the pandemic started in June of last year that FP&A was one of the most important parts of the organization because of the value in best-in-class organizations they were able to deliver, because they had, let's say, a fully integrated ERP system. They had a proper data warehouse strategy, and they had the ability to do scenario planning where they were able to bring all of this information together collectively and drive better insights for their business partners. So that's the next key step. Having a proper, the ability to do scenario plans through modern cloud-based technology to deliver better insights and bringing all of this in together. So let's move on. I think the last one I want to talk about is extended planning and analysis, bringing all of this together. And what the key thing for extended planning analysis, it goes back to what Guillaume talked about, business partnering. For FP&A, it's really the fact that we know that everybody plans in an organization. It's not just us in FP&A. Marketing is planning on their campaigns and their spend for the following year. Sales is planning their targets for the following year or for the following month. IT is planning their capital expenditures. Supply chain is planning. HR is planning for workforce and attrition and hiring and all of those metrics. So everybody plans. We accept that. And we know that those plans exist. But best-in-class organizations are able to bring all these operational plans together in with strategic alignment across all departments. And the key thing here is that finance leads the process. So it's not just about finance creating their plans, but finance owning the income statement top down. Finance owning the balance sheet plans top down and bringing these plans in from across the organization so that organizations can make faster and more confident decisions. Let's accept it. So when sales plans, marketing is dependent on the sales target so they can do their proper campaigns. IT is dependent on how much hiring has to happen from HR in terms of new employees so they can plan for their IT spend. And supply chain needs to know what sales is planning for so they can do some sort of proper S&OP type planning and have the proper demand balance so they can have a reconciliation and support all of that. And maybe HR can look at what a supply chain wants to deliver in terms of goods and come up with some sort of workforce plan that can help support the output. So again, all of these plans happen, they happen in silos, but with a proper FP&A strategy, we bring this all together. So as we move on, I want to highlight how FP&A properly works. In the past, as finance, we've talked about what's happening yesterday. We talk about why things have happened. But best-in-class FP&A really brings all of this together through scenario planning, predictive planning, connected plans from all across the organization. And we talk about what Guillaume talked about as well, being able to do proper storytelling because we know what's happening, what everybody's planning for. And we articulate this all through what should happen. We use predictive analytics to talk about what could happen based on disruptions in the supply chain or opportunities for sales and such. So through a proper extended planning and analysis, as corporate, as finance, we help make strategic choices. As finance, we help deliver bottom line results. We help sales drive the top line growth, and we help supply chain optimize the cost of goods sold. Why? Because we as finance have visibility across the organization. We've eliminated silos and brought it all together. So thank you, everyone. And Larissa, I'm excited to hear about some commentary.
Pras, what a great, what are the great insights? Fantastic presentation. Thank you for sharing with us the technology trends. Guillaume, I would like to ask you to join us as well. So I updated this slide with some additional trends, technology trends that came from Pras, such as integrated ERP, data management, scenario planning, extended planning and analysis. Guillaume, any commentaries from your side as a practitioner?
Yeah, thank you, Larissa, and thanks, Pras. That was very insightful and complete. The key reaction I would have two main. I think the first one is, you said it well, Pras. When we looked at everything that is out there, it feels that we need to do it all, right? So there, it's not one or the other, whether it's integrated planning, data management, scenario planning, or FP&A. All those are really critical stuff that we need to tackle in some sort, maybe not with the same level of maturity on each, because we all, start from a different starting point, but definitely something that we do. And as a practitioner, I can tell you that on each and one of them, those are things that within the last, at least at Walmart, within the last 15 months, those are projects that we have engaged on. The second thing that resonated very well is, you said at a point in time, sometimes it's a bit scary. We discuss about stuff that are a bit scary. You mentioned data management, some few things on the ERP as well. As a practitioner, my take is it is scary, but the wrong answer would be not to spend some time understanding the product. I think we have a natural tendency when it's scary and complex, somewhat to say, all right, someone else that has a better expertise will manage it. I think what you're highlighting and what I'm very passionate about is it's somewhat true and not true. We need experts to be able to support, but it's everyone's role to understand the product, get into that level of details, because if not, we'll not be able to unlock enough value from these products.
Thank you so much, Guillaume. From my side, Pras, I'm really excited about what is happening in the area of FP&A. Something that not happened just now. You see, Gartner called this FP&A. Previously, we called this integrated planning and analysis. And we've seen this trend at least for the last 3-4 years, when FP&A people become more strategic and influential. But if I would describe the situation right now and what is needed the most, obviously it's scenario management. Yeah, when 1 year ago, when we found ourselves with a lot of dead plans and unrealistic forecasts, the whole world started to place scenarios. And now the ability to place scenario practically in real time at different levels of your organization with using of knowledge of these different people around the globe and with the using of data. I would consolidate it this way. So fantastic insights, great. Thank you for sharing all of these. And now we would like to hear from our participants. So the next polling question, and it's about the technology trends. So what is the most important technology trend right now? I'm launching this polling question, and please start to vote as soon as you see it. So it's about what is the most important technology trend right now for you, for your company. We know that all of them are important, but what is the most important to you? So please choose one, the most important one. Is it integrated ERP and planning process? Is it better data management? Is it scenario planning? Is it adopting extended planning and analysis, where FP&A is involved in all planning processes around the organization? Please continue to vote. I can see that more than 60% of you voted just a few seconds. I'm closing the poll and I'm sharing the results with everyone. As you can see, 32% say that integrating ERP and planning is important. 27% say that adopting extended planning and analysis it's important. 25% voted for better data management, and scenario planning 16%. Oh, actually, I'm surprised that scenario planning is 16% only. Pras, any commentaries from you?
Yeah, I mean, this actually makes sense to me. I mean, the fact is that we've talked about how people are struggling with data. So having an integrated ERP and planning systems means that, as finance and as FP&A, we have access to our forecasts, our budgets and plans. But we're able to compare them to our actuals in real time and be able to, make adjustments on the fly and give better business decisions. And that's really an extension that leads to, once you have that integrated ERP and planning, to better FP&A, because you have then a pulse through your ERP into what's happening everywhere else beyond finance, whether it's supply chain, HR, CapEx spend, sales, or whatnot. So that is a key factor, having integrated ERP and planning, that it's not just integrated from data, but integrated in terms of information and being able to drive real-time instant planning and analysis versus waiting for the end of the month. Because again, I hate to think that in 5 years from now or 10 years from now, any of us will say, I'll get back to you.
Thank you so much, Pras. And Guillaume, any commentaries from you, the quick ones, please?
Yes, I found it very interesting. I would have, personally, at least in my company, in my previous one, data management would have been number one short term, but maybe I guess it depends on the maturity. I think the takeaway is it's somewhat very balanced. We're roughly, all of them are important. I think that's the takeaway, and I agree with you. Scenario planning is a bit lower, which is quite interesting. I think to Pras' point, it means that ERP and planning are really critical enablers.
Thank you so much for your commentaries. Thank you everyone for sharing your results. And now just a few quick conclusions before we go to the Q&A session. So today we were looking at some of the insights from our survey. And we looked at those insights from the point of view of value creation, those 8 trends that were identified. They're so much in line with the top 10 trends that we identified at the beginning of the year. So definitely it's all about value adding FP&A, and it's all about understanding, describing, steering, extracting, and reporting the value of the company. So now I'm starting the Q&A session. Guillaume and Pras, please can you join us? Can you switch on your cameras? And we are starting a lot of questions. Please continue to send them. Those that we wouldn't be able to answer, we will answer offline. Guillaume, the first very interesting question is to you. Do you have a rule of thumb when too much analytics can slow down the business decision-making process? Is this such a thing as too much analytics? Do you believe that it could be like this, Guillaume?
Thanks for asking. It's a very, very good question. I do not have a rule of thumb. My intuition tells me on a day-to-day basis that the judgment is when we talk too much about analytics or numbers, something is wrong. Because in the end, what we should talk a lot about is business outcome. How can we generate more, whether it's growth, whether it's profit, cash, we all have different priorities. But really that should be, strategic conversation. Analytics somewhat should be an enabler. Now, sometimes, which is why I'm hesitating, I've seen that there's so much insight coming out of analytics that you tend to want to say why and why and why and why and why, and that takes a lot of time. So I would say great question, but my rule of thumb would be, let's talk a lot about analytics and numbers, but not too much, because we should not lose sight of why we're all doing this.
Thank you, Guillaume. Great answer. Pras, the next one is to you. Any tips on how to manage those in the business that feel that integrated planning will be too transparent? How do you get them comfortable with providing the information to a level of detail needed for effective rolling integrated forecast? So what would be your answer to this, Pras?
Yeah, I think the fear that often many of the departments have, or the the cross-planning groups, whether it be sales or marketing, the different silos have, is that by adopting XP&A, they're sacrificing some of their models and the way they plan into a homogeneous type of planning, and that's not the key here. The key here, as I mentioned, is that to help respect the way everybody plans. We know that everybody plans. Marketing plans the way they plan, but we can't expect marketing to plan the way finance plans. Marketing will always have to plan based on their campaigns and their spend, and that spend should be based on real sales information, what sales is doing in the moment, not what sales is dictated 4 months ago, and then if they pivot, marketing didn't automatically have access to that information, because in today's day and age, we need to be able to react efficiently and on the fly. So the idea is to highlight the fact that it's not about moving everybody to one simple way of planning, but letting everybody to plan with their complexity and their nuances, but having all that information visible for those that need that information to make better decisions. So that's really all it is. Respect everybody's system of planning, but bringing it all together.
Thank you so much, Pras. Great answer. The next one is to you, Guillaume. Actually, a lot of questions, but please continue to send those questions. We wouldn't be able to answer all of them, but we will try to do this in offline regime. So the next question is about your effective FP&A's business partnering. So what is your definition of effective FP&A business partnering, Guillaume, especially in this situation when we have to create a lot of value in FP&A?
Thanks for the question. I think there's a couple of things that we can highlight within what we mean by effective. But the definition you had on FP&A, where you had the key buckets, is actually a good one. I think if we put ourselves in the shoes of our business partner, I think key expectation should be, one, understand the business, what happens in the past, and how is that informing the things that are coming in the future. So first is to understand. I would say the second, which is a bit basic, but still to control, right? We, as a finance individual, there's an expectation that we lay the foundation, we keep control in. Should not be predominantly where we're spending time, but that is also critical. I would say the third one that I see is support effectively. So by support, it can mean, bounce ideas, discuss about what's the impact of a certain project, of an initiative, in terms of the trade-off and balance that will bring to the financials. How can we foresee a different strategy over the future and what value that will bring? Do an investment analysis. So just supporting the decision that would allow the business to grow further. And I would say the fourth one is to challenge or to hunt for value. I think, what I've learned in my career is we tend to believe that the challenging part is something that people are a bit shy of doing because they feel that they will not be recognized for doing so by their business partner. I've seen exactly reverse. When it's well done, that's exactly what the business is asking. They want us, or they expect from us, to be able to challenge the status quo, sometimes to look at new ways, to do things. It can be, if I'm in retail, it can be, all right, how can I do a new link between a certain product that we sell at a certain location, bridging with market share, which will raise some question as to the commercial strategy that we have for that region. And then you can start to challenge people by saying, why are we doing things this way and not another way? Could we potentially unlock more value by doing things differently? So I think there's that basically combination that is expected, which makes the role hard, but also very fun to do.
Guillaume, thank you so much. Great insights. And now the last question to Pras. There are more questions, but please continue to send them and we will answer them after the webinar. Pras, a very interesting one, and we have a very short time to answer it. Sure. It's not easy. In this incredible environment, how we can leverage technology that largely take past data to predict the future, but in reality, the business models are changing so quickly that very often past data are not explaining the future trends. So what would be your quick answer on this one, Pras?
Sure. So with modern planning solutions, I mean, there's obviously machine learning AI insights built in for predictive planning. And you're absolutely right. I mean, data for 2021 would be impossible to predict with 2020 or 2019, but it's definitely a start. But the key thing I always say when it comes to predictive planning and predictive analytics is use historical data as a baseline. But there is an absolute important, huge need to put in some human intelligence in there as well. So that's where you can put in some of your permutations and combinations of assumptions. So that's where you can adjust the biases of historical data as well. So it's about bringing all that together. But I promise you that is absolutely possible with modern planning solutions.
Excellent. Thank you so much. Thank you for answers. With this, I would like to close this Q&A, but please stay with me because there are some very quick announcements. We already started to plan our fourth quarter for the webinars and for some FP&A, digital FP&A boards as well. We are planning that face-to-face meetings will restart at the beginning of next year. And we would like to invite you to the webinars. The registration is open. How to manage profitability in uncertain times. It will be on the 28th of September. The link is exactly at this presentation, and we will send this to you as well. And also the next one, best-in-class FP&A and how to get there. So there will be some practical insights around this. It's September the 15th. With this, I really would like to say thank you so much to our fantastic speakers, Guillaume and Pras. Thank you for sharing your insights. It was very interesting, and obviously we will share the results of the survey after this meeting. We would like to say thank you so much to our sponsor, SAP. Thank you so much for being our partner with our digital events, with our survey, and also with our face-to-face events as well. Thank you so much, SAP. And I would like to say thank you so much to all of you. Let us be connected. Let us continue to stay together and share the latest trends and developments in modern FP&A. You know how to find us. So if you have something to share, please get in contact. And finally, before we close this webinar, and you will have opportunity to participate in survey to let us know how we can do better, I would like just to remind you that there are so many ways how we can connect. So please follow us, please connect, be part of our group, let us communicate, let us be together. Finally, Guillaume and Pras, I'm so much hoping that we will meet each other in person at the beginning of next year. But in the meanwhile, stay safe, stay healthy, and thank you so much for supporting our global FP&A community. Thank you for sharing your wonderful insights today. All the best.
Same to you. Bye-bye.
Thanks, everyone. Bye-bye.
Thank you.